Okay, get this. The world of crypto is making a huge move on big oil. I mean it. Binance, one of the largest crypto exchanges on the entire planet, is stepping right into the global energy market. And trust me, they're not doing it quietly.
So, what really happens when a titan from the crypto world decides it wants a piece of the energy market? This is so much bigger than just a new product launch. We're talking about a potential disruption that could completely reshape how the world's most vital commodities are traded. So let's unpack exactly what's going on.
So it all starts with one single massive announcement from Binance. And this thing sent shockwaves through both the crypto world and, the traditional finance world. This is where the story really gets good.
Here it is, the main headline. On April 1st, 2026, Binance Futures is going to start offering futures contracts for crude oil and natural gas. I mean, just think about that for a second. This is a huge expansion for them, moving way beyond their usual business of just digital coins.
Okay, so what can you actually get your hands on? Let's break down the specific new products that are about to hit the platform. All right, so Binance is rolling out 3 new contracts. First up, you've got CLUSDT, and that's for WTI crude oil, the main benchmark over in the US. Then 10 minutes later comes BZUSDT, which is for Brent crude, the big international benchmark. And finally, NATGASUSDT for, you guessed it, natural gas. And you got to notice the timing. They're staggering the launches, just minutes apart. They're definitely being careful here.
And here's a really key detail. These are being offered as perpetual contracts. Now, if you're from the crypto world, you know exactly what that is. If not, it's pretty simple. Unlike traditional futures that have a set expiration date, these, well, they just don't. That means a trader can hold their bet on the price of oil forever, basically, as long as they've got the funds in their account to cover it. Okay, so that's the what. But now for the really juicy part, the why. Why are they doing this? This is absolutely not a random move. This is a deeply strategic play by Binance to challenge the old, established financial system.
Here is their biggest advantage. Traditional markets, they have opening and closing bells. They sleep. If some world-changing news breaks on a Saturday, well, too bad. You got to wait till Monday morning to react. But crypto markets, they never close. We're talking 24/7. This gives traders all over the world instant access to trade on news the second it happens. That's a game changer. You see, this is all part of a much larger plan. Binance isn't happy just being in the crypto corner anymore. They're actively trying to pull in those traditional commodity traders and go head-to-head with the established giants like the CME Group. It's all about increasing the total amount of money and activity flowing through their entire system.
But, and this is a really big but, with all this ambition comes an absolutely gigantic risk. And it all comes down to one number that has everybody talking. So, let's get into the most controversial part of this whole thing.
100x. Just let that sink in for a second. That's the amount of leverage Binance is offering on these energy products that are already incredibly volatile. This is like pouring rocket fuel on a bonfire.
So what does that actually mean? Well, for every $1 you put in, you get to control $100 worth of oil or gas. If the price moves just 1% in your favor, you double your money. Incredible, right? But, and this is the part you absolutely have to understand, if the price moves just 1% against you, your entire investment is gone. Poof, wiped out. That's called liquidation, and it's the brutal reality of trading with this much leverage.
And hey, don't just take it from me. Even the source for our explainer today, Scion Blockchain, put out a very direct warning. They basically said, do not touch this unless you know exactly what you're doing. They're making it clear that this combination, volatile commodities plus extreme leverage, is incredibly dangerous for anyone who hasn't done their homework.
So you've got this massive opportunity on one side and this incredible risk on the other. So what does this all actually mean for the future of trading energy?
And it's so important to remember the timing here. Binance isn't launching this into a nice, calm, stable market. No way. They are wading into an arena where prices are already swinging like crazy because of everything happening in the world. And that just amplifies every single thing we've talked about.
All of this leaves us with some huge unanswered questions. Is Binance now a true direct competitor to the old-school commodity exchanges? Is there going to be enough trading, enough money in the system to keep prices stable? And here's the really scary one. What if there isn't? Could we see these bizarre, totally abnormal price swings just because of low volume and extreme leverage?
And that right there is the ultimate question we're left with. On one hand, you could say Binance is opening up access to markets that used to be only for the big institutions, democratizing finance. But on the other hand, they are introducing a level of risk that could cause unprecedented volatility. So, are they building a more open and accessible future, or are they just unleashing a new kind of chaos? I guess we're all about to find out.